Empieza.
Imagine being the largest mining corporation in Mexico and the fourth largest copper producer worldwide, besides having the lowest extraction cost in the industry and the biggest copper reserve in the entire world. Imagine being all that, plus a leading company in freight transportation and infrastructure development. That, ladies and gentlemen, is Grupo México. Good afternoon, everyone. My name is Jimena, and after completing a thorough analysis and evaluation of Grupo México, me and my team, which represents Universidad Anáhuac Sur, recommend a hold position with a target price of $4.04, which represents an upside of 9.19% in comparison to the closing price of November 4, 2022. Mexico's mining industry represents 3% of its domestic GDP and 9.6% of its industrial GDP. It has grown around 10% annually since 2017, and despite the COVID-19 pandemic, it grew 23% in 2021. Because of their beneficial business plan, and with the help of their three divisions, Grupo México holds a significant competitive advantage in an industry which offers an undifferentiated product like copper. Being a top player, Grupo México was compared with companies that have both American and international presence. But given the macroeconomic situation, which indicates that copper price will fluctuate significantly in the following years, investing in the mining industry is not assured in terms of profitability. Their unique business model, which is powered by above-average ESG practices, seeks to maximize its profit and strengthen its position as a global mining company. They are compromised with this vision, which is why they are looking to invest an average of $1.9 billion in the following decade. This will guarantee that their copper production will increase by 73% in comparison to its 2020 production of 1 million tons. Another one of their advantages is their geographic reach, given that they operate in 3 of the 15 largest copper-producing countries in the world. Besides that, their affiliates and associates operate in 7 different countries, 24 Mexican states, and have access to 13 different ports across the Gulf of Mexico, the Pacific Ocean, and the Atlantic.
Environmental, social, and cooperative matters are part of Grupo México's core business. They scored 17% higher in the 2021 S&P CSA than what they did in 2019, performing way better than the industry average. They had also obtained ESR distinctions on their infrastructure and transportation divisions, and its rating on ESG has improved from CCC to B. One of their main areas of opportunity is gender equality, since less than 20% of their workers are women and there are no female members on the board of directors. Some other areas of opportunity regarding environmental issues are displayed on the slide. Despite this, given their outstanding performance on the matter, Grupo México has been part of the S&P Global Sustainability Yearbook 2022, and we can assure that the company keeps an eye on maintaining a continuous improvement process in terms of overall sustainability. The company's main strength is that, by heavily relying on the mining industry, its positioning and broad market share place it among the dominant companies in the industry. In addition, the optimization of their extraction processes is what allows it to maintain the lowest cost in the industry and therefore being an even more profitable company. This is supported by the fact that the price of copper serves as an indicator of the global economic situation, as it is correlated to the GDP growth trends in China, the US, and the European Union. It is also supported by the recent trend on green transitions, which depend on copper for a more sustainable supply of energy. Being heavily dependent on copper, Grupo México must not only consider demand, but also those aspects that are relevant for its supply. They must consider that they are subject to variations in its price due to many different risks.
Grupo México has a clear outlook into how they want to grow their business. Had they based their growth strategy solely on copper price increments, they could have found themselves in a difficult position within the next couple of years. But they didn't. They are well aware of the risk involved in doing this, and instead opted for an approach in which their revenue scales alongside their copper production levels. For this, they must make CapEx a key element of their strategy. Should they fail to meet their capital expenditure annual goals in years to come, this will carry out a negative impact on their ability to increase their copper production levels. As shown by the long-term debt to total capital ratio, Grupo México presents an overall more aggressive financing strategy when compared to its peers. Or a more heavily financed operation is not a bad thing at all if you're effective at handling that debt. And that, ladies and gentlemen, is the case for Grupo México. They present some of the lowest operational costs throughout the whole industry, while also presenting a ROIC level that is placed above both the median and the average of its peers, showing that they are not only more effective at handling their debt, but the totality of their available resources.
About the company's dividend policy, they offer an attractive average dividend yield, but even though their dividend payment has been historically consistent, they do not hold productive assets. This means that their dividend decision depends upon the operations of their subsidiaries. For the valuation, we decided to use 4 methodologies: free cash flow to the equity, relative valuation, dividend discount model, and real options approach. Then, a weighted average of the prices obtained was calculated with the following weights: 50% for free cash flow to the equity, 25% for real options approach, 15% for relative valuation, and 10% for dividend discount model, resulting in a stock price of $4.04. Now, given that we know that the company does not have intentions of modifying its capital structure, a valuation through free cash flow to the equity is reasonable. The cash flow projections was sales-driven, and knowing that a big driver of this company's performance are copper prices, we decided to use a model that reflects the future expectative for the supply and demand of this commodity, resulting in a stock price of $3.73. Next, in order to perform relative valuation, we choose comparable firms considering fundamentals similar to Grupo México, such as growth, level of risk, and leverage of the company. Then, a weighted average of the prices obtained by using the multiples of price to earnings per share, EV to EBITDA, and EV to total source revenue was calculated with weights of 60, 30, and 10% respectively to obtain a stock price of $4.63.
The dividend discount model was used since Grupo México's dividend repartition has been consistent throughout the years. As a reminder, we arrived at a historical payout ratio of 55.75%. We're also considering the same long-term growth rate that we're using in the discounted cash flows valuation, as we think that this reflects the company's growth potential in the long run. This yielded a final price of $3.77. Finally, the real options approach to valuing natural resources companies considers the possibility of expanding through projects, viewing them as options. This is a great complement to discounted cash flow valuations, and in the case of Grupo México, we consider 2 projects to be fit for this valuation method: El Arco and Los Chancas. This can be seen as options that can be executed until the estimated value of resources surpasses both the capital and production investment that the projects require. And as we can see in the projects, Los Chancas is slightly out of the money. Meanwhile, El Arco is deep in the money. This will mean that for Grupo México, El Arco is recommended to start capital investments as soon as possible. Meanwhile, Los Chancas must wait either for more favorable market conditions or to get a better estimation on the resources found underground. This valuation method yielded a final price of $4.4.
When it comes to risk, copper is, once again, the name of the game for Grupo México. With the complicated economic situation, China, the world's largest copper user, at the edge of a housing crisis, and a worldwide stronger dependence than ever on copper price productions, and a worldwide stronger than ever dependence on copper, that will bring this price up as everyone pushes towards greener energies. We're expecting the price of the volatility on the price to be high, making this our number one risk to keep an eye out for. In the present global market situation, we must also take into consideration fuel and energy prices, which have been very volatile as of lately due to a variety of reasons. Considering that approximately 30% of Grupo México's cost come from fuel, this becomes especially alarming. Permits and concessions are something else to keep in mind. Given that most of the activities that Grupo México takes on are heavily regulated, sanctions or a withdrawal of these permits could have a severe impact on their overall profitability. Ladies and gentlemen, difficult economic times are right out the door. Market estimations and the uncertainty that hangs upon the economy made us be cautious with our valuation. For any investors who are already in a long position for Grupo México, we are supporting a hold recommendation because it is only a matter of time for the market to start giving out new huge opportunities that Grupo México is more than ready to take on, thanks to their strong position in the industry and clear long-term strategy. Thank you very much. We will now be taking your questions.
Thanks for the presentation. I have one question. Why do you think the team of Grupo Mexico is a plural team? If we look at the board, we have only male composition, and we have a board that has been there for almost, let's say, close to 20 years. So I would like you to explain me why you think that's considered to be a plural team. Thanks.
Well, we know that Grupo Mexico is a company that has many areas of opportunity, and that is just one of their main areas of opportunity, since the last change on the board of directors was made 19 years ago, and there, as you say, there are no single members on the board of directors. So what we think on this aspect is that is one of the main areas of opportunity and development that the company has to work in with.
Good presentation and very good governance in your team with 3 men and 2 women. And the question has to do with that. And you mentioned that they do not have any woman as a member of. But then you're showing a relative value compared to some competitors. But in this part, you are not considering the composition of the board. But do you think that is this affecting the price of the stock? Do you think that some investors, either individual, institutional investors like local investment funds or pension funds, are not buying the stock because of that?
Yes, especially in the last year that ESG matters have become more important in terms of investment for those investors that are looking to invest in new companies. We do believe that the fact that there are no women in the board of directors, as well as only 20% of their workforce being only men, can affect in their decision of investment or not investment. Nevertheless, we do believe that Grupo Mexico is working towards changing this. They have a specific group of women working in Grupo Mexico. I do not recall specifically the name of that, but they are a concentrated group of women that are looking to change some of the things in the company so that little by little they can transform themselves into more equally representative, like more women and more men are part of their directive team.
Can you go back to the slide where you break down the methodology? Sorry, just when you break down by the other one, when you assign a 60% to the PE, 30% EBITDA. Okay, why did you PE versus EBITDA? 60 for EBITDA. Why is?
Okay, so previous to performing relative valuation, we run a regression to find the factors that drive profitability in Grupo Mexico's industry. Okay, and what we did was put return on equity as our dependent variable and a variety of financial indicators as our regressors. And what we found with our final model is that profitability is negatively related to the leverage that the company has and the cost of goods sold margin. So, in assigning these weights, we consider that we assign the highest weight to price to earnings per share because earnings or net income is an after debt and after operating income, or operating cost or net cost of goods sold margin. So that is why it was even the highest percentage. Next, we have EV to EBITDA, and EBITDA is not an after debt measure of income, but it is an after operating cost, or in this case, after cost of goods sold measure of income. And finally, we have EV to total revenue. In this case, total revenue does not reflect either of those two variables, so that is why it was even the lowest percentage.
Thank you, but if you apply some logic to the thought process, I mean, in a cyclical industry like mining, where you have a lot of capex going on to produce whatever product, you should be using more EBITDA versus earnings. Do you agree?
Yes.
To isolate the effect of high capex and high levels of debt, which Group Mexico doesn't have, right? I mean, 1.4 times leverage is okay for a cyclical industry, but I mean, I would just note that. But overall, great analysis in your 4 methods of getting to a target price, and I like the way that you used all 4 of them, including real options.
Good presentation. And in your forecast, you are expecting a lowest income in the company in the next year. But in the Appendix 3, you are estimating a growth, for example, in the volume of production of copper. What are you thinking about? Are you supposing recession or?
Yes,
What
in the
will happen?
following year, what we're considering is that right here you can see the projection you're talking about in appendix. As you can see, the production in Grupo Mexico is increasing in the next year because what we're considering is the projects that are certain. For example, El Pilar, right there, right under there, you can see Pilares, which is the project that they will be accepting next year. As for the current projects, we're expecting them to maintain an average production from their last couple of years. However, the following year, China's growth will be really affected by the fear of an economic recession, especially there's a housing crisis almost on the verge of occurring for this country. And this is the main driver for copper price, which as you can see, we have a 6% drop projected for 2022 and a 16% drop for 2023, which means that overall, Grupo Mexico is negatively impacted by these market conditions.
How do you think about the risk of laboral side, the possibility of a strike in the mining sector, especially?
So, Grupo Mexico is known for having had some of these strikes. They are working currently on their security measures and are working with the workers on previously incident locations to have a better agreement with them. But a new incident is not as likely as long as they keep pushing towards in their security measures. This is a risky industry and it's a risky work to be in mining production. But as long as we do not have any significant incidents, a strike should not be occurring.
If Germán Larrea ends up buying Banamex, how would that impact your valuation approach?
Yes, Grupo Mexico has been involved in the buying of Banamex as of lately. As we can see every morning, there's this discussion as to who is going to buy Banamex, right? However, in the evaluation, we didn't consider this risk because we are currently taking Grupo Mexico as of no merger and acquisitions on the horizon. However, what we would consider is that overall it will have like a huge impact on the valuation, and it will take like an additional, for example, an additional valuation of another company, right? That is not currently part of Grupo Mexico's operation.
So would you view that negative? Would it be
Positive or negative?
It will be negative.
okay?
Gracias.